For 2 millennia, the concept of global crises escalating like birth pangs has remained a purely qualitative metaphor. To treat this abstract warning as a data science case study, we have to find the physical signals that define systemic risk. The first signal is kinetic conflict. We translate headline volume into a measurable war score, grounding the model in the physical reality of geopolitical instability. The second signal tracks tectonic volatility. Using live API feeds, the model captures global earthquake counts to establish the raw numbers for our seismic score. We are converting chaotic events into a unified SQL database. This structure is required for detecting an objective transition to a higher stress baseline. This aggregation happens within the Global Convergence Index, or GCI. This instrument must solve a mathematical comparison problem. How do you weigh the physical magnitude of an earthquake against the psychological fear in financial markets? The solution is rolling z-score normalization. This math standardizes variance across data streams, outputting a 0-100 scale. It allows us to view war, seismic, disease, VIX, and food stressors on a common scale, aggregating them into a single stacked column. We can now test 26 years of GCI data for increasing intensity, shorter intervals between shocks, and multi-vector convergence. Forcing these observations through a mathematical filter removes cognitive bias, leaving only the data required for objective anomaly detection. When the GCI system first went live in March 2026, it initially output erratic 100-level spikes, followed by sudden collapses to near zero. The erratic swing on the left illustrates why short-window statistical baselines fail in risk modeling. Without historical context, an immature standard deviation causes the system to overreact to normal daily data variance. To anchor the mean, we fed the system a 10-year historical data backfill. On the right, the line smooths out. The historical anchoring provides a stable variance plot that only reaches extreme levels during genuine anomalies. This shows that early erratic readings are often artifacts of bad baseline calibration. Fixing the anchor establishes a continuous, verified dataset for the 26-year study. We define intensity as a statistically significant positive trend in the peak master index over time. In the early 2000s, the GCI ceiling remained capped. Peak stress typically stayed in the low 60s and 70s. Post-2014, the entire floor of the index shifted upward. We see peaks hitting 81 in 2014 and 2020, eventually reaching the all-time system high of 84 in 2021. We define frequency by measuring the time between structural contractions, where the master index reaches 80 or higher. Before 2014, 80-plus events were nearly non-existent. The system had ample time to recover between minor shocks. In the last decade, extreme contractions cluster together. The system now undergoes sequential shocks without returning to its historical baseline. The numbers show the core mechanics of the hypothesis are in effect. Peak intensity is increasing, and recovery windows are shrinking. Convergence occurs when 3 or more risk vectors simultaneously breach the critical threshold of 75. During the early 2000s, multi-vector convergence was rare and isolated to specific episodes. In these early clusters, the VIX score functioned as an early warning indicator. Market volatility frequently rose before physical stressors manifested. By the mid-2010s, kinetic conflict and unrest began compounding with financial stress, resulting in a significantly elevated war score. This peaked in 2020 and 2021, which recorded unprecedented back-to-back years where 4 vectors crossed the critical threshold simultaneously. Global stress now manifests through synchronized multi-axis volatility. We apply this 26-year context to deconstruct the current behavior seen in March 2026. A terminal break is defined by a master index of 85 or higher occurring alongside 4 simultaneous critical vectors. This radar chart plots the vectors for March 1st through 5th against that terminal threshold. In early March, the war score locked at 100 and seismic reached 86, touching the limit. However, disease and VIX failed to converge, remaining near the center. This anatomy shows March 2026 is a partial spectrum escalation. The system is under high stress, but the structural ceiling remains intact. Step back from the March slice to view the final results of the entire 26-year study. Peak intensity has variably increased, and the intervals between major contractions have compressed. The data shows a move away from a low volatility baseline and into a state of persistent multi-vector convergence. Even if March 2026 is not the terminal spike, it is operating on a floor that remains elevated above historical norms. The hypothesis of escalating global contractions is supported by quantitative data science. The indicators show the global system has already transitioned into this new state.